We wanted to update you on what is going on within the company, so we'd love it if you could stay put for a while. Keep watching and subscribe to our channel for it. With that said, let's get this video started. Many Tesla fans are impressed by the company's products and strategy, but they worry that the decline in stock price will force Tesla to make cuts to keep its finances in order, especially for its stockholders, although the company hasn't done anything regarding its share buyback. It is clear that numerous analysts have shared their opinions on what they believe a Tesla stock buyback may entail for the firm's stock price, but the corporation is blind to the requirements of its investors. This is not the first time that Gary Black, a fellow Tesla bull, has taken matters a step further by writing an open letter to the company's management. In it, he outlines the many positive effects that he believes this will have on the company and its stock. The question of why Black believes Tesla needs to buy back some of its shares from the stock market is addressed, as Black, managing partner and co-founder, has openly addressed the Tesla board of directors with this information. Since Tesla stock is currently valued at its lowest forward P ratio since the pandemic and has an investment grade rating in place, Black has suggested that the company consider an aggressive multi-year plan. Black's company holds a significant stake in Tesla stock, with its most notable holding being in the flagship Future Fund ETF. A Black individual who thinks that repurchasing stock will give Tesla's management a boost in profits suggests that the company may become like Apple and Google and benefit from a buyback of stock. Remarkable flexibility in terms of adjusting the level of optimism because of the strong demand for its electric vehicles. Short-term rumors have caused Tesla's stock price to drop over the past few weeks, with a recent 50 decline indicating a critical moment for the company. Since 2019, Tesla has given investors enormous returns, and the company was temporarily valued at $1 trillion. The automaker has continued to meet demand. In 2022, despite difficult market conditions, it has raised its earnings dramatically. But with the automaker's $18.9 billion in cash and marketable securities, almost zero debt as of its most recent 10Q filing, and future fund expectations of up to $20 billion in free cash flow in 2023, some investors are wondering if now would be a good time to examine his top. Black wrote that it might be a good time for Tesla to buy its stock, noting that at the closing price of $221.72 on October 13, 2022, assuming 2013 non-GAAP earnings, so 42 and 30 times P, we calculate an annual internal rate of 24. The dividend yield on Tesla shares is 3.6%, which is better than the company's first year after tax return on cash. Chairman of Tesla International and a shareholder in Tesla, Gary Blake, believes that buy boxes continue to have favorable long-term capital gains tax treatment and are simpler to manage than dividend distributions to shareholders. In addition to Black, Leo is another builder. Favors from Leo Kagwan Tesla will buy back its shares if the value of its stock increases. The company should announce its plans to buy back $5 billion in shares this year and $10 billion next year. The automaker could use its free cash flow to fund the buyback as soon as October 1. The buyback can also help to generate funds for Musk's purchase of Twitter. Therefore, now might be the perfect time to buy some shares, as he has until October 28th to fulfill his $44 billion deal with a social media platform. However, it is still unclear how many shares he will unload. This is a significant decline, as previously stated by the Tesla shareholder who had previously called company to announce a $15 billion stock buyback when its share price was declining in May. Gary Black disputes the idea that repurchasing shares impedes a company's growth and adds that repurchasing should only take place once all internal operating projects have been funded. For example, if Tesla decides to purchase baggage shares, there are a number of good reasons for the decision, one of which is that purchasing the company's stock provides a return on investment that is much higher that of alternative financial strategies like debt repayment, acquisitions, dividend payments, or completely depleting Tesla's cash, according to Gary Black's open letter to the Tesla board. The company will likely generate $10 billion in free cash flow after all operating investments over the next 3 years. A buyback of this magnitude would hardly affect the company's financial flexibility and would be a strong indication that the board takes its responsibility as a driver of shareholder value seriously. Tesla is also steadily approaching its annual volume growth target of 50. Tesla's flagship energy storage system demonstrates how the market is beginning to recognize the company's significance in this sector. These developments mark a strategic shift for Tesla, establishing the company as a leader in the automotive sector and a key participant in the global automobile industry's migration to renewable energy sources. At this critical juncture in its evolution, the next several years will determine whether Tesla can maintain its growth pace in the face of intensifying competition, especially from up-and-coming firms like BYD in crucial regions like China, which has become a battleground for the domination of electric vehicles. This fight is especially fierce. With the release of the more affordable $25,000 model, Tesla took a chance in an attempt to broaden its appeal and draw in more customers. To maintain its market leadership and appeal to a market segment that the company hasn't thoroughly explored before, Tesla must take this approach. Robot taxis and Tesla's continued investments in and advancements of autonomous driving technology are key elements of the company's future plan. Not only does this expand Tesla's range of manufactured products, but it also aims to fundamentally alter our perception of and interaction with technology. Vehicles, if autonomous driving technology is successfully implemented and a fleet of robot taxis is deployed, urban transportation could undergo a revolution as traditional auto ownership would be lessened and a more sustainable, efficient, and networked mobility environment could be established. Furthermore, Tesla's robot taxis, which provide affordable and useful transportation options, have the potential to completely transform accessibility for the elderly and those with impairments who are unable to drive. By improving mobility for these populations, Tesla has the potential to be a major force in advancing independence and social inclusion. Imagine how Tesla's self-driving technology and energy sector innovations could combine to create a new benchmark for environmentally friendly transportation. Can Tesla continue to dominate the market outside of the automotive sector in the face of growing competition and shifting consumer preferences? How will Tesla's innovative projects, like the Optimus robot, affect industry and technology in the future? Elon Musk's utilization of Twitter to engage in political discourse and communicate with individuals from diverse backgrounds is detrimental to Tesla shareholders, according to esteemed analysts. A Tesla bull has expressed displeasure with Musk's excavated headwear on Twitter on multiple occasions recently. There are sizable groups of retail investors in Tesla and Sourcing Incorporated and Tesla models, and they stand to benefit greatly from the increasing value of the company's stock. This concludes our video. If you found it useful, please consider leaving a like and remember to subscribe, which will help us grow the channel even more. Thank you for watching, and we will see you in our next video. If you own Tesla shares, please let us know what you think the company should do if it decides to pursue a share buyback. Please share your thoughts in the comments section below.